But Shrikant Nadella, MD and CEO at KFin Tech, joins in to talk about how their quarter was. Shrikant, hi, great to have you on the show. Largely inline set of numbers from you, from what we can see, although the margins have seen a bit of a dip on a 4% sequential basis. What would you attribute this pressure to, and do you sense that the pressure is going to sustain all through the financial year, or was it a one-off?
Hi, very good morning, and thanks for having me over. Yes, the numbers are in line with the expectations. The revenue numbers have beaten the analyst average consensus. On the sequential basis, if I may call out, the nature of our business and the industry is such that the quarter one of every year, you would see a certain dip compared to the Q4 of the previous year. So on sequential basis, you're expected to see a dip. It largely comes from the fact that the assets under management, say for example on 31st March as compared to 1st of April, and the amount of growth you would expect to see in that quarter would not be adequate to cover the wage inflation that typically sets in around 1st of April. So you plot, KFin Tech's numbers over the past 5 years, every single year in Q1 there would be a certain dip. And as the quarters progress, we tend to catch up and then eventually end up with the numbers in the range of around anywhere between 43 to 45%. In fact, if you were to look at the Q1 numbers of FY24, our total EBITDA numbers were roughly about 37%. This year we are close to 42%. So it's a near 500 basis points expansion of this quarter compared to the previous quarter in terms of the overall EBITDA numbers. We do not see this to be any concern. In fact, this is a much better result as compared to any of the previous Q1s of the past 4 to 5 financial years. We expect the margins into the subsequent quarters to grow significantly from here on.
How much of the current growth is essentially coming from the non-mutual fund business? Because that also is important for us to understand.
Very good morning, Nikunj. Yes, today if you see mutual fund business grew roughly about 32% year on year. Our international business has grown nearly twice as fast. Roughly about 57% has been the growth on the non-mutual fund business. Issuer solutions, which is my other larger business, again, the Q1 of every year again is a slightly tepid growth, tepid in comparison to our own businesses, though we still grew about 22% even on issuer solutions. That happens largely because a chunk of revenue attributable to corporate actions of the corporate India, largely around dividend declarations, buybacks, so on and so forth, usually kick in from Q2, Q3, and Q4 onwards. So you would see into the subsequent quarter, growth attributes across the stack, including the go live of roughly about 4 international contracts we won about 3 quarters back, and 2 large contracts we have won in the past 4 weeks alone since the quarter has closed. So fair to say that the rest of the businesses are, pretty much think of the help.
Contracts are largely in India itself, or even your US and Europe, because you were talking about how you want to deepen your presence in those geographies as well. What's been the scale up? What kind of investments are you likely to make? What's the expectation as to how the overall contribution can change from these geographies?
Certainly, we are not currently yet in US and Europe. We have largely been an Asian player. We have started Thailand as a new location this year, having won a large contract there. So that gets us to be about, present in about 5 countries beyond India. That's Malaysia, Philippines, Hong Kong, Singapore, and Thailand. Europe and US, we're working towards it. Timelines are a little blurry in terms of the regulatory nature of work that we do, but I expect in the next 12 to 24 months, we would have kickstarted our US and European operations. For now, we look at Asia and India, of course, to grow, and Asian markets themselves offer a significant amount of growth, especially in the context of their markets not performing as well as Indian markets in the past 24 months or so. We have been seeing a mark-to-market gains in each of those 5 countries in addition to new client wins. In terms of the overall profile of the revenue mix that we have, mutual funds in India contribute about 65%. We expect in the next 24 to 36 months that skew moving towards anywhere between 55 to 60% to be taken by mutual funds, even as the other businesses tend to grow nearly twice as fast as the Indian markets for us.
Seems now looking at cutting costs, taking advantage of operating leverage. Do you think in future also that could be a challenge, let's say for a back-end service provider like yours, while size of the business will grow, that's top line, but in terms of pricing pressure, renegotiation, deals could be off?
Yes, and I think one should expect that to be so. And this industry or this company is not immune to pricing pressures, and it's no different from any other industry as well. But if you see, this is not new. The pricing pressure, this had been there for the past 35 years of our company's existence, and probably even more pronounced in the past 7 years when the mutual fund markets and the capital markets have been growing quite rapidly in India. Our growth subsumes any pricing pressures, right? And that said, many of our large contracts have already been renewed, and that happened roughly about in the previous year. So we do not expect any significant pricing pressures into the next 24 months. And globally, now having understood, or rather, the some of the key lessons that we've heard from the Indian markets, we're not taking forward to the international markets. There is no yield compression if you see in the rest of the geographies, because that is not an operating model we have. If anything, we have our collar clauses kicking in, and actually the yield expanding in other geographies as compared to India.
Okay, so you're not expecting pricing pressure over the next couple of years, but what about the acquisition strategy? Are you looking at something in the pipeline, any inorganic growth opportunities?
We always do. We have a very, very vibrant and robust, M&A strategy led by our committee driven by the board, business development and strategy committee. And we have, if you saw a track record, every single year we have had at least one acquisition. We are currently looking at three acquisitions. One of the acquisitions that we were looking back in the day in Europe did not materialize due to a significant amount of expectations that the incumbent has had. But that said, we are pretty close to getting a few of these things moving into the coming quarter to two. And these would be sizable, and these are largely in the international space.
Okay, thanks so much for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.